What do you usually do on payday when your paycheck is credited to your bank account? Do you spend your money on alcoholic drinks at the bar right away? Or do you immediately go to the department shop to check out the purse you've had your eye on for some time? That is a common mistake that people make from time to time. Please hit subscribe button for more informative videos. Step 5. Understanding the real estate market in 2025. Understanding your market is the first step before you jump in. The markets have changed this year. In addition to a return of small-town prospects brought on by remote work and hybrid working patterns, 2025 is witnessing a high demand for rental homes in cities with robust tech businesses. Cash flow and appreciation are the two main factors to take into account. Cash flow markets. Before you leap in, you must first understand your market. This year, the markets have altered. 2025 is seeing a strong demand for rental properties in cities with thriving tech companies. In addition to a resurgence of small-town opportunities, driven on by remote employment and hybrid working habits. The two primary considerations are cash flow and appreciation. Appreciation markets. On the flip side, there's the allure of appreciation markets. These are areas where property values increase over time, such as parts of the Southwest or certain suburbs of major cities that have seen new business investments. The key to succeeding in an appreciation market is patience. You may not see strong monthly cash flow right away, but as the property value rises, you can cash out big when it's time to sell. For example, buying a property in a growing tech hub like Austin, Texas, or a city that's been rapidly redeveloping could result in huge long-term gains. In appreciation markets, you'll often be paying more upfront, but you'll be gaining in the value of your property long-term. Step 4. The pros and cons of short-term versus long-term rentals. Should you go with Airbnb or stick to traditional long-term rentals? This is one of the most common questions for new investors in 2025. The short-term rental model has been booming, but local regulations are tightening. Airbnb-style rentals offer higher cash flow, but managing them can be a hassle. You'll need to keep track of bookings, cleanings, guest interactions, and maintenance. If you're just starting, it might feel like a lot to handle. In addition, some cities have cracked down on short-term rentals, so it's critical to understand local laws before jumping into this model. Long-term rentals, the steady option. For many first-time buyers, long-term rentals are the better option. While the cash flow might be lower, the consistency of monthly rent payments offers peace of mind. Plus, you're less likely to face the regulatory hurdles that come with short-term rentals. When you go the long-term route, you'll be focused more on securing a reliable tenant and ensuring the property is well maintained over the years. If you're a busy professional or someone just starting out, this could be the more straightforward option. Step 3. Financing your first rental property in 2025. In 2025, the lending landscape has shifted. Traditional mortgage rates are higher than they were a few years ago, which means you'll need to be creative to buy your first rental property. W-2 workers. Take advantage of low-down payment options. If you're a salaried employee, it's actually easier than you think to buy a rental property in 2025, even if you're broke. While the conventional loan route still requires a down payment, there are options that can help you get started. FHA loans. As long as you're willing to live in the property for at least 1 year, you can take advantage of an FHA loan and only put down 3.5%. This gives you an opportunity to start with less cash upfront. Conventional loans. If you're able to save up for a down payment, a conventional loan can be a good option, but you'll likely need at least 5 to 20% of the property's value. VA loans. If you're a veteran, you can access 0% down payment loans, making it easier to secure your first rental property. Entrepreneurs, get creative with financing. For entrepreneurs or people who don't have 2 years of solid tax returns, getting a conventional loan might not be an option. But don't worry, there are still ways to get into the real estate game. Private lending. Consider private lenders or hard money loans, which can be faster and more flexible than traditional bank loans. House hacking. This is one of the smartest strategies for entrepreneurs. Buy a property as a primary residence with a low down payment. Live in one part of it and rent out the rest. This can help cover your mortgage and give you cash flow while building equity in your property. Step 2. Building wealth over time. If your ultimate goal is to build substantial wealth through real estate, it's crucial to adopt a strategy that combines long-term thinking and active management. Real estate investing is not a get-rich-quick endeavor. Instead, it's a process that requires patience, persistence, and a commitment to steadily growing your assets. The importance of long-term thinking. One of the most important principles of real estate investing is understanding that wealth accumulation takes time. This is a long-term strategy that pays off over years, and sometimes decades of ownership. If you go into real estate with the mindset that you will see quick returns or that you will suddenly become a millionaire, you might be setting yourself up for disappointment. Step 1. Where to buy in 2025. The real estate market is still in flux as it recovers from recent economic shifts, but there are still significant opportunities for savvy investors. To maximize your returns, focus on markets that are experiencing strong growth but still offer affordable entry points. Cities in Texas, Arizona, and Florida continue to be solid bets due to their growing populations, expanding job markets, and low cost of living compared to other regions. However, don't overlook smaller, up-and-coming markets where demand is starting to surge. These locations, often in suburban or developing areas, offer excellent potential for long-term appreciation as businesses and infrastructure continue to invest in the region. By focusing on areas that are seeing consistent investment and growth, but haven't yet seen explosive price increases, you put yourself in a prime position to capitalize on future gains. Early investment in these regions could provide substantial returns as prices rise and demand continues to grow. The key is to identify the right time to enter before prices reach their peak. Final thoughts. There are many chances to purchase your first rental property in 2025, regardless of whether you're a W-2 employee or an entrepreneur with a non-traditional source of income. Even though the industry is more competitive now than it was a few years ago, you can still succeed if you have the correct plan, perseverance, and a little imagination. Don't forget to do your homework first, comprehend your financing possibilities, and take into account both the cash flow and appreciation markets. Making wise, informed choices that position you for long-term success is crucial. Thanks for watching. If you enjoyed this video and found it helpful, make sure to give it a thumbs up and hit that subscribe button so you don't miss out on our future uploads. Don't forget to turn on the notification bell to stay updated every time we post new content.